as I mentioned, Facebook CEO Mark Zuckerberg set to speak at Georgetown today at 1 p.m. We are going to bring that to you live here on Yahoo Finance.
But right now, shares of Union Pacific are in focus after the company reported third quarter earnings that missed analyst expectations. Joining us now is Union Pacific CEO Lance Fritz. It's always good to see you, Mr. Fritz. And just want to point out that shares right now, they have been trading higher. They started a little bit lower after the earnings report. And I think a lot of what might have frightened some investors was the summary of third quarter freight revenues. Ag products down 1%. I assume that was probably China related. Industrial down 1%. We know that manufacturing is shrinking right now in the United States. Energy down 20%. How much longer can that be sustained? How, your margins, it would seem, would be getting squeezed.
Well, Adam, we did a heck of a job this quarter. As you point out, the top line wasn't what we would hope it would be. It was 8% down. But in that environment, the team did a great job fundamentally resetting our cost structure, finding productivity, driving productivity, and we actually improved our margins by 2 percentage points, roughly.
I want to, Lance, it's good to see you again. Before we turn back to the margin question, because I do want to dig into that a little more, I am curious about the demand picture here. As Adam mentioned, you're seeing freight revenues down, volumes down as well. What are you seeing out there in the economy? What are these declines in volumes reflecting?
Yeah, Julie, the volume decline for us in the third quarter was part freight railroad specific and part industrial economy. If you walk through our business segments on the agricultural side, grain products were down, offset a little bit by food and beverage, which is shipments of things like beer. And as Adam pointed out, a lot of that had to do with trade. You go over to energy, that was mostly driven by coal being down and frac sand being down, a little bit of offset with crude oil up and some other LPGs and refined products showing a little strength. In the industrial segment for us, we had a bright spot in construction material, that's essentially rock shipments and plastics, but there was weakness in paper and forest products, which is largely reflective of a relatively weak housing market. And then in the premium segment for us, international intermodal was down, domestic intermodal was down. Domestic intermodal is about competing against a very loose overcapacity truck market. And finished vehicles were slightly down. And that's because the finished vehicle market, sales of finished vehicles in the U.S. is basically treading water.
Right.
And we also had a little impact from the GM strike.
Lance, overall, if there is a U.S.-China trade deal signed, will you see a rebound in volumes?
Yeah, overall, it should be positive. It'll be positive. A U.S.-China trade deal, comprehensive, will be positive in a number of ways. One, it'll take an overhang from the U.S. economy that's about uncertainty and the direct and indirect impacts of having hundreds of billions of dollars facing a 25% tariff and the potential for $500 billion facing that kind of tariff. That has a real impact on consumption. And for us, it has a direct impact on things like exports of grain product, some manufactured product. So for sure, a U.S.-China trade deal, comprehensive one, will be good news for us and good news for the U.S. economy.
When we talk about how you've guided this company, you've got 42,000 employees, 32,000 miles of track, one of the two largest railroads in the country, 23 states. Your terminal dwell time, 20% improvement year over year. You've also got the quarterly freight car velocity, 213 daily miles per car. That was a 10% improvement over the third quarter of 2018. How much more efficient can you become to where you reach that peak? Because you're being rewarded today for guiding the company through these difficult trade headwinds, but how much further can you go?
There's upside left, Adam. We've got upside in train size. We've got upside in employee productivity. We've got upside in fuel efficiency. There's upside in how efficiently we can use locomotives, freight cars. We are only scratching the surface at the productivity that we can achieve in maintaining the railroad. So across the board, as we enter next year, we think there's still plenty of opportunity. And the beautiful thing, the thing that makes me really quite optimistic, is that once we get through some of these headwinds that are both specific to Union Pacific and then specific to the U.S. industrial economy, a little upside from volume will go a long way. We'll really be able to leverage volume attractively as it starts occurring.
Lance, Myles, Udland here. I want to jump a little bit off Julie's question because you're kind of talking about what could happen for Union Pacific if there is a U.S.-China trade deal. But internally, as you see it, I mean, are you planning for that? Is that your baseline assumption? What are you hearing and seeing from your customers that gives you a sense of what the economy could look like in 2020?
Yeah, what we said on our call today is early indicators are maybe flat to slightly up volumes next year. And that's basically assuming kind of status quo conditions, that our relationship with China doesn't deteriorate, but that it doesn't also somehow become much more optimistic and positive. There's a lot of moving parts that could create upside for us. U.S.-China trade relations improving. We could get rid of some of the overhang that we see in the global economy. Maybe our housing market starting to percolate a little bit more. So there are certain things, and one big thing that will occur at some point is the overhang in excess truck capacity. That is a real negative impact on a number of our markets as trucks compete directly with us for freight.
Mr. Fritz, we only have 10 or 15 seconds. Very quickly, if the loss this quarter in volume was 8% and it's largely due to trade, and we get a trade deal, would we get all that 8% back next quarter?
I think it's premature to say that quarter to quarter, and it's premature to say all 8% of that is related to trade, right? There's some specifics like coal and frac sand that really don't have anything to do with trade. But it would be a positive. It would be a positive for the economy and a positive for us.
Lance Fritz is the CEO at Union Pacific, and we appreciate your being here on The Move. All the best to you and all the people at Union Pacific, Mr. Fritz.